Good morning, you're watching Market Cafe with me Shreyansi Singh and my co-anchor Snehi Shah, and over the next 1 hour, we'll take you through news and updates from within the country as well as across the globe. Good morning Snehi, so mixed handover coming in from the US then?
Absolutely, Shanti. Not much happening, but not much to worry about because on some days when nothing happens in the market, it's also a good thing compared to what our markets did yesterday, bleeding nonchalantly. So, let's come back to the Wall Street and see what the moves were like. And Nasdaq was the outperformer among all of the three main indices on the back of Netflix because Netflix reported its subscriber count reached a new record in the fourth quarter. Netflix shares also surged yesterday 8.6% in extended trading. Now, the streaming company has added more than 13 million new subscribers in the fourth quarter, bringing its total subscriber count to an all-time high of 260.8 million. We'll of course discuss about this in more detail later in the show. And let's talk about the indices and how they moved. The Dow pulled back almost 0.2% during yesterday's main trading session following disappointing earnings reports and guidance from several blue chip companies. Meanwhile, the S&P 500 gained 0.3% to reach an all-time closing high. Nasdaq, like I mentioned, was the outperformer, added 0.5% on that index as well yesterday. And on the economic front, traders will be looking forward to the US manufacturing and services data for the month of January. Fourth quarter gross domestic product, that's GDP, will also be released later in the week. So some key data can be expected in the US this week. So keep your eye out on all of that as well. So that's the handover when it comes to the American markets. Not much happening over there. But shifting focus to Europe then, because that's where all the action was. All across my screen is a sea of red as we speak because the Pan-European Stock 600 index provisionally closed with a downtick of 0.2%. Sector performance came mixed. Construction stocks were down almost 1%. Mining stocks rebounded from Monday's losses to trade almost 2% higher. DAX down 0.3%. CAC down 0.3% as well. Stock 600 down 0.2%. FTSE, however, rather flat, ended in the red nonetheless, but very flat, just a 2-point downtick coming in over there. So this is the handover that we are seeing globally. Shreyansi, not much happening, so let's see how that pans out for us, especially after what happened in our markets yesterday. But with that, tell us what's happening in the world of crude.
Absolutely, so nothing much actually is happening in the world of crude because when you look at oil prices, they were largely flat after Libya restarted production at a major oil field and as output slowly recovered in North Dakota after a winter storm. So when you look at the WTI contract, that lost about 0.5% to settle around that $74 a barrel mark. And when you look at Brent as well, that also fell about 0.6% and settled around that $79 a barrel mark. Now, Libya restarted production at the Sharara oil field on Sunday, which has the capacity to produce 300,000 barrels per day. The oil field was shut down for about 2 weeks due to protests. And this was an important move coming in. Oil output is also slowly recovering in North Dakota. And this is after a blast of Arctic weather that we've seen hitting the third largest crude producing state in the US. Oil production was down by 250,000 to 300,000 barrels per day, which compares with about 700,000 barrels per day. Now, prices also edged lower as reports circulated that Israel had proposed a 2-month pause of fighting in Gaza in exchange for the release of all the remaining hostages. Traders are also following this particular war closely for any signs that it could erupt into a regional conflict that disrupts oil supplies in that particular region. Oil prices had rallied about 2%, mind you, on Monday, and this was after a suspected Ukrainian drone strike against a major Russian fuel terminal on the Baltic Sea highlighted the geopolitical threats in that particular region. Now, when you look at gold on the flip side, you did have gold prices edging higher, and this is as investors awaited a slew of US economic data this week for more cues to the Federal Reserve's timeline for interest rates. Mind you, lower interest rates decrease the opportunity cost of holding the yellow metal. So let's see how gold prices react to policy meeting on January 30th to 31st. But for oil as well as gold, not all that much happening as of now.
Well, absolutely, and let's shift focus and talk about some global stories that we've been tracking for you. And in signs of a loosening labor market that could help the Fed make its rate cut decision in the next meet, unemployment rate has increased in 15 states in the US in the month of December. Now, this is up by 3 states from the prior month. Now, however, non-farm payroll employment remained largely unchanged in all of the states.
Netflix soared after trading, like you mentioned, and is supporting US futures currently after the streaming giant reported a stellar set of results for its fourth quarter. Its subscriber addition blew past all street estimates as it added over 13 million subscribers. This was led by popularity of shows like The Crown and David Fincher's original film The Killer. The Street believes subscription could remain strong as Netflix announced that it will stream the popular WWE Raw starting next year. Remember, the deal is the streaming platform's biggest step yet into live entertainment.
Well, and let's shift focus to Japan because a slew of economic data coming in from Japan this morning. The exports jumped 9.8% to a record high in December, the strongest rise since December 2022, beating all market forecasts. While services PMI also strengthened for the 17th straight month, but manufacturing PMI continued to contract even as it rebounded from its 10-month low. And on the back of that, Nikkei is under pressure as we speak, almost a 0.5% cut coming on Nikkei as of now.
And with market sentiment near multi-year lows for China-based companies, Alibaba founders are stepping up. CEO and founder Jack Ma has been buying the beaten down shares of the company in recent months. In fact, Ma and his associate Joe Tsai have bought shares worth more than $200 million. Alibaba's stock soared overnight on the release as this move indicates that founders believe the business is undervalued.
Well, shifting focus then, the German software company SAP aims to carry out voluntary buyouts or enable job changes for 8,000 employees as part of their restructuring program in 2024, amid efforts to reposition itself as they aim for faster growth. The restructuring is set to impact 7% of the workforce. Meanwhile, eBay also announced plans to lay off 9% of its workforce, amounting to roughly 1,000 employees amid a slew of tech layoffs.
And in other significant news we're tracking this morning, after 4 intense hours of debates, the Turkish parliament has given its go-ahead for Sweden's NATO membership. Turkey's ratification leaves Hungary as the last holdout in an accession process that Sweden and its neighbor Finland began in response to Russia's invasion of Ukraine nearly 2 years ago.
Well, and shifting focus then, Mubadala Investment Company aims to double its exposure to Asia by 2030, moving from 12% to approximately 25% of its $300 billion assets under management. Now, the Abu Dhabi-based sovereign wealth fund, while maintaining focus on the US, is shifting attention to underweight markets in China, India, Japan, as well as South Korea. This strategic move aligns with the broader trend of Abu Dhabi entities seeking opportunities in faster-growing emerging markets, particularly in Asia.
And the nominations list for the Oscars 2024 has been announced without any surprise. Oppenheimer is leading with the list with total 13 nominations across categories including Best Picture and Best Actor. Barbie's second, no surprises for guessing that. In the list with 6 nominations, other key contenders are American Fiction for Best Picture, the Best Actress category, Killer of the Flower Moon star Lily Gladstone is pit against Daniel Brooks for The Color Purple. Movies like Poor Things, Maestro and The Zone of Interest have also received nominations.
Alright, all eyes will be on the Academy Awards taking place in March of this year. But with that, let's slip into a very short break. When we return, we'll take stock of how the Asian markets are doing. So stay right here.
Welcome back. Thank you so much for staying tuned in. Well, let's take a look at the Asian markets then. And in Asia, you do have Nikkei. Now, Japan's December exports beat expectations. There's been a slew of economic data coming in from Japan, with its trade balance turning in a $62.1 billion surplus compared with a $122.1 billion deficit that was widely expected by a poll of economists. Now, the data comes a day after the Bank of Japan left its monetary policy unchanged. So you do have those moves coming in on Nikkei, down about 0.6%, extending losses from Tuesday as well. Now, when you look at ASX 200, Australia also saw flash PMI surveys from Juno Bank, which showed an expansion in manufacturing activity in January after 11 straight months of contraction. But regardless, you do have ASX 200 down marginally, down about 0.8% thereabout. Pardon me, 0.1% thereabout. And when you look at Hang Seng on the flip side, you have strong gains coming in for the Hang Seng. You're seeing an uptick of about 2%. Also extending gains from yesterday, so largely maintaining that trend that we saw yesterday. Shanghai also in the green, up marginally about 0.7% thereabout. And when you look at the Nifty implied as well, yesterday we closed around the 21,238 mark. Today we're seeing a gap up open, and we're going to be opening around that 21,266 mark. So that's what we're seeing today, but just a marginally stronger open. And yesterday, of course, we had the top losers like media and realty. So let's see how this pans out for our markets as well.
Well, absolutely. What intraday moves on the Nifty yesterday? Day's high of 21,750, day's low of 21,192. So, well, 21,266. Let's see how that pans out for us.
Welcome back. Thank you so much for staying tuned in. Well, let's take a look at tax collection then. And in the latest release, the Central Board of Direct Taxes unveiled significant growth in India's direct tax landscape. So when you look at net direct taxes, they surged by 160.5%. Gross direct tax collections also witnessed a remarkable 173.3% increase. In fact, my colleague Bhavya Dua is standing by over the phone line with more details. Bhavya?
So, Central Board of Direct Taxes, CBDT, has shared a time series data which has been updated to the financial year of 2022-23, which shows some of the statistics about the direct tax collections over these last few years. So, if we compare like financial year 2013-14 to financial year 22-23, we have seen some significant rises. So when we look at net direct tax collections, that have increased by more than 160% from almost 6.3 crores in financial year 2013-14 to more than 16.6 crores in financial year 22-23. Similarly, when we look at gross direct tax collections, that have increased over 173% as well. So from somewhere around 7.2 CR in financial year 2013-14, they have increased to 19.7 crores in financial year 22-23. When we look at direct tax to GDP ratio, that has increased from 5.62% in financial year 13-14 to 6.11% in financial year 22-23. Now, if we look at the cost of collection, that has decreased from 0.57% of total collection in the financial year 2013 to 0.51% of the total collection in the financial year 2023. The total number of ITRs that have been filed in the financial year 2022-23 stands at 7.78 crore, which shows an increase of 104.9% as compared to the total number of ITRs that were filed in 2013-14, which stood at 3.8 crores. So if we look at these years, we have seen a significant growth in the number of direct tax collections that have come in, gross direct tax collections that have come in, and the number of ITRs that people have filed. So we see more and more people filing their tax returns and more collections by the department.
All right, thanks Bhavya for taking us through that. Thanks for all of those details. Let's move on then. And the government is finalizing the modalities of the PM's Sarvodaya scheme, and REC will play the role of overall program implementation agency. That's the word coming in from the REC CMD Vivek Devangan. In an exclusive conversation with ET Now, he says that the subsidy structure will be rationalized on rooftop solar installations under this new scheme. Listen into what he had to say.
Ministry of New and Renewable Energy is working on the this PM Suryodaya scheme. They'll be coming with a comprehensive guideline. The subsidy structure is also being planned to be revised, particularly in the lower segment, from 1 kilowatt to 3 kilowatt. The subsidy amount may be higher, and the subsidy amount is applicable from up to 10 kilowatt category. With the renewed focus, and this rooftop solar mission would be taken in a mission mode now. And Honorable Prime Minister has already announced that we'll be targeting 1 crore household to be covered in 1 year. And overall, by the year 2026, we have to target installation of 40 gigawatt capacity from the rooftop solar. And as per the mandate given by Ministry of New Renewable Energy, REC is going to play the role of overall program implementation agency.
So what would be the overall capital allocation, because the government will be providing subsidy amount, as you mentioned, even below 3 kilowatt capacity. So what would be the overall fund size?
Say for 1 megawatt capacity, the total cost comes around 5 to 6 crore. So if you are targeting 40,000 megawatt capacity from rooftop solar, total financing required would be to the tune of about 2 lakh to 2 lakh 40,000 crore. The subsidy amount is there for capacity up to 10 kilowatt. The subsidy amount for the initial category from 1 to 3 kilowatt is say 40.
Well, moving away from that exclusive then, let's shift focus to key earnings. When you look at Hitachi Energy, that was a big miss as the company's revenue and PAT came sharply below estimates. The other stock, on the other hand, is Indus Towers, which reported a solid set of numbers. Somit is standing by to decode the tale of these two contrasting results. Somit, take it away.
Well, two earnings that one need to watch out for today is firstly Hitachi Energy, a big miss coming in compared to what the street was estimating. Now, though the revenues of the company are higher 4% on a sequential basis, it is 9% below the street estimates. EBITDA also similar, 4% higher on sequential basis, but nearly 42% below what the street was expecting. Now, the net profit here has declined by around 7% on a sequential basis, but it's down nearly 66% as compared to what the street was estimating in the third quarter of FY24. Now, for order inflow, if you see, it's flat on a YY basis and down around 29% on a sequential basis at close to 1,240 crore rupees. Now, sequential basis, it has declined around 29% because Q2 orders included a large contract from high power SATCOM order. Hence, it was a kind of bloated, and hence we are seeing this 29% decline on a sequential basis. Now, if you see the company's outstanding order book, that stood at close to 7,550 crore rupees, again flat on a sequential basis and just 1.5 times its trailing 12-month revenue. And given the high valuations of the company, this kind of performance could be negatively taken by the street in today's trade. On the other hand, if you see, Indus Towers has reported a strong set of numbers as compared to what the street was estimating. Revenues are higher by around 1%, EBITDA is up by nearly 5%, margins came in at close to 49.8%, while the net profit of the company was up nearly 19%. But if you see on the operational side, it was the third consecutive quarter of record net tower addition by Indus Towers. Tower adds stood at close to 7,563 crore rupees higher on a sequential basis, and this is because the company has been continuously gaining market share from Bharti Airtel, given their faster rollout when it comes to the rural market. Collections, now this is the important part coming in for Bharti Infratel or Indus Towers for that matter. Collections were more than 100% in the third quarter, and this was with higher receivables, and that also moderated on a sequential basis. Now, given the fact that collections were more than 100%, it means that they have recovered some funds from Vodafone Idea, past funds from Vodafone Idea. Receivables also moderated by around 170 odd crore rupees on a sequential basis. Now, given the fact that their other income was also higher, it means that Vodafone Idea has also paid some interest amount when it comes to their pending receivables. Now, though the cash inflow on a 9-month basis, if you see, is still negative for the company, analysts are expecting Indus Towers to reinstate their dividend payment in FY24. However, the amount could be lower compared to what the company has given in the past financial years.
Alright, Somi, thanks so much for taking us through that. Hitachi Energy and Indus Towers, will be keeping our eye out on that, on those two counters as well. Now, moving on, government is likely to hike insurance cover under the Ayushman Bharat scheme. ET now has learned from sources that health insurance cover under the scheme will be hiked from 5 lakh rupees to 10 lakh rupees per family. Anurag Shah, who's tracking this story, has more details on this. Anurag, what are you picking up?
So, under the Ayushman Bharat scheme, in upcoming budget, government is likely to increase the scope and coverage of Ayushman Bharat scheme. Presently, the Ayushman Bharat scheme covers around 10 crore family and gave a coverage of 5 lakh rupees. But as per our sources, in budget, there is a likely to be announcement will be there that limit of 5 lakh will increase and it will be at least 10 lakh. So it can go up to 15 lakh also, but it's likely to be increased up to at least 10 lakh rupees per family insurance coverage. Because the rationale behind this is that in last state assembly election, we have seen that parties and announced that insurance coverage up to 10 lakh, 15 lakh, 25 lakh. So that supports the claim that Ayushman Bharat coverage will increase from 5 lakh to at least 10 lakh. Apart from that, presently it covers only families which are under the BPL criteria, below poverty line. So government may announce the extension of the coverage, which may include gig workers, MSME, unorganized sector worker, senior citizen can also be included in this scheme. And for senior citizen, as per our sources, there may be an announcement of standard health insurance policy on which insurance companies are also working, so that because presently it's very difficult for senior citizen to avail a health insurance coverage because premium rates are too high and there are very few insurance company which offer health insurance policies for senior citizen. Even if they are offering, the premium rates are too high and unaffordable for senior citizens. So there will be private hospitals has also agreed on the dedicated standard packages for the treatment under the Ayushman Bharat scheme. So in upcoming budget, we'll see a couple of announcements related to the Ayushman Bharat scheme, which will enhance the coverage and scope of insurance.
Well, thanks Anurag for those details. Keeping it with the budget cover then, government is likely to increase agriculture credit target in the interim budget. ET now has learned from sources that to spur rural demand, agriculture credit target may be hiked by 20 to 25%. Let's go across to Prakash Priyadarshi, who filed this report earlier.
Yes, we're learning from our sources that the government is likely to increase agriculture credit target in the forthcoming interim budget. We are given to understand that the agriculture credit target likely to be enhanced by 20 to 25% in order to meet increased demand. Agriculture Ministry has sent this proposal, which is actively being considered by the Ministry of Finance. We are given to understand that the government is planning to attain saturation level when it comes to Kisan Credit Card Scheme, where more agriculture sectors, including allied sectors, will be covered going forward. Along with that, leftover farmers under this scheme will be extended, to the institutional credit. That will help government to spur rural demand and overall growth going forward. As you are aware that the government has already initiated Ghar Ghar KCC campaign, where government is trying to achieve 100% coverage under this scheme, and all these efforts are being made in this direction. As you are aware that the government provides a loan to the farmers at concessional rate of 7% with additional benefit of 3% when a loan repaid by the farmers on time.
All right, thanks Prakash for all of those details. With that, we'll slip into a very short break. We'll return with more stock-specific news on the other side, so stay tuned.
Welcome back. Thank you so much for staying tuned in. Well, let's study a potential mean reversion move then. This has been spotted on the Nifty. This is the index's third attempt to deviate from consolidation. In fact, Ansh is standing by to take us through the technicals as well.
Right, so in last 20 sessions, Nifty has been consolidating between the range of 21,500 to 21,800 for most of its time. Now the consolidation usually acts as a mean, in simple words like a magnet. So any deviation from the consolidation gets pulled back towards the consolidation. As you can see in the chart as well, Nifty went out of the range on upside by around 1.5%, but then it got pulled back. Same happened here on downside as well, and then it got pulled back. Recently, it is below that range by 1.4%. So if Nifty stays around this level and not give a decisive breakdown or close below this level, we can expect Nifty, as per mean reversion studies, to get back around this range.
Well, all right, thanks. Ansh, thanks so much for taking us through that. But while you're with us, also run us through what the FNO snapshot is looking for like today. What's the derivative space doing?
Right. So let's start with Nifty chart as well. Nifty has touched a 1 month low level as well, and as we have just saw that Nifty is consolidating within this 300-point range, and mean can take Nifty back into this range. So in index option, we are seeing some put bang happening at around 21,200 and 21,100, indicating traders are actually hoping Nifty to fall below this 21,300 and to sustain around 21,200, 100 level. Whereas if we see Nifty Bank chart, the Nifty Bank has touched its 2-month low, slipping below its 100 DMA. However, we have 200 DMA around 44,600, which may act as a good support on the falling prices. If we see the index options, then we are seeing put bang happening at around 44,500. So traders are actually hoping Nifty Bank to break below the 200 DMA as well. Whereas on upside, we are seeing some call rating happening at 45,500, indicating resistance around this level.
Well, thanks, Ansh, for that update. But switching focus to Axis Bank then. Axis Bank delivered a positive set of numbers for the third quarter. Let's go across to my colleague Gaurav, who's standing by with the earnings fine print. Gaurav?
Yes, so if we talk about Axis Bank reported positive numbers, and it was actually in line with what the street was expecting. If we look at net interest income, it increased almost by 1.8% on a sequential basis to 12,532 crore rupees. PPOP increased almost by 5.9% on a sequential basis to 9,141 crore rupees. PAT came up at 6,071 crore rupees, which gave a sequential increase of 3.5% in this quarter. And all this resulted into net interest margins coming up at 4.01%. Although it declined by 10 bips on a quarter-on-quarter basis, but it was largely in line with what the street was expecting. Let's also talk about the asset side. If you look at the advances and deposits, advances grew almost by 22% on a YY basis, while deposits also grew almost by 18% on a YY basis. Talking about the asset quality, gross NPAs are now below 1.6% levels. It is now at 1.58% versus what it was at 1.73% in the last quarter, and net NPAs remained flat at 0.36%, which is actually a low level if we compare it with other banks. And this also resulted into credit to deposit ratio to come up at 93% versus what it was at 94% in the last quarter. Lastly, let's also look at the slippages. Slippages were in control at 0.5% versus what it was at 0.6% in the last quarter, and bank has reported ROE of 18.61%, and the bank has also maintained this trend of maintaining ROE above 18% for the last 6 quarters now. Let's also look at some key commentaries coming up from the bank in the quarterly call. So they believe that they have increased the price on the incremental disbursement when we talk about the personal loan side. They believe that bank has a low CASA ratio, and they have also added 100 branches in this quarter. And with this, they have completed the branch addition of 349 branches during 9 months of FY24. If we look at the credit growth, bank believes that the system's credit growth is going to get converged to deposit growth of 13%, but they will be able to grow 400 to 600 basis points higher than the system, and they are very confident about it. And on this, we also have brokerages where Kotak believes that Axis Bank can achieve a target price of 1,225 rupees, and that is why they have maintained buy rating, because they have seen very low negative points in this quarterly commentary, and that is why it will aid the higher multiples for the bank. So all in all, it seems that the results are positive. Brokerages are also being positive for the bank, so it will be really interesting to see how stock price reacts in today's trade.
Well, absolutely, Gaurav. Thanks for taking us through that. A strong set coming in for Axis Bank. That stock was down and out 3% in trade yesterday. Let's see if that changes today. But another stock to watch out for today will be Tata Steel, because that is all set to report its Q3 numbers today. So what's the street penciling in? What are the expectations? Let's go across to Ashesha for all of those details. Ashesha, take it away.
Well, yes, for Tata Steel this time we are expecting strong set of numbers as far as its domestic operations are concerned. But as far as European operations are concerned, losses are expected to expand on a sequential basis. Consolidated revenues for Tata Steel could come in at about 56,850 odd crores, up 2% sequentially, while margins are expected at 8.5%, up about 70 to 80 basis points on a sequential basis. As I mentioned, we are expecting strong set of numbers from its domestic operations, where realizations are expected to rise 2% sequentially, while EBITDA per ton is expected to increase by about 4 to 5 odd %, led by higher volumes, higher realizations, and limited impact of higher coking coal prices in the quarter gone by. As far as European losses are concerned, EBITDA per ton loss is expected to come in at about $185 to $195 per ton, much more than what it had reported in the previous quarter. This is on account of lower volumes and lower realizations and limited impact of higher raw material prices. As far as management commentary is concerned, commentary on capex and debt will be crucial. Apart from this, management commentary on European operations, especially UK, will also be keenly awaited this time.
Well, thanks, Ashesha. So we'll keep an eye on Tata Steel. But with this, we're timed out on this edition of Market Cafe on ET Now. From me, Shreyansi Singh, my co-anchor Snehi Shah, as well as the entire team that put this show together, thank you so much for watching. Stay tuned because the market takes the action forward.